Today we had Josiah Smelser on, and he talked to us about his portfolio transitioning from about a $4 million single family, $50,000 annual income portfolio to just about six short-term rentals, which generate, wait for it, $600,000 a year in cash flow. Real huge transition in his portfolio, and it's really paid dividends to him, such to the point that he's reached financial independence. Patrick, what do you think about today's episode?
I thought today's episode was packed full of amazing insights into how you can over 10x your income moving into short-term rentals. We talk about, the Airbnb apocalypse that's supposedly going on right now and how there's still opportunities out there. So make sure to listen to the end. We got some amazing book recommendations, podcast recommendations, and a ton of hidden gems in there. So here it is.
You're listening to the Real FI podcast, where we discuss time-tested tricks, techniques, and strategies for pursuing financial independence today, so that we can enjoy a better tomorrow. Financial independence isn't about getting rich quick. It's about cultivating a foundation to grow financially, mentally, physically, and spiritually. Let's figure out how to kick the 9 to 5. Here are your hosts, Patrick and James.
How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
Terrible, man. I'm battling this North Carolina sweaty heat with a broken down car with no AC. Other than that, I think we're going to have a pretty good conversation today with Josiah. He's going to give us a little bit of background about what he's got going on in his business and in life. So without further ado, Josiah, why don't you introduce yourself to our listeners and tell us a little bit about what you got going on?
Yeah, guys. First of all, thank you so much for having me. Love your stuff. Love following along on Instagram with you guys. Excited you asked me to be on the show. So yeah, a little bit about me. I'm located in North Alabama, in Florence, Alabama. My family just moved here from Huntsville. We were in Huntsville for about 5 years, but I grew up in Alabama. Lived in Dallas, Fort Worth for a while. That's where I bought the majority of my single family properties. Long story short, I built a BRRRR portfolio, which, if the listeners aren't familiar, that's buy, rehab, rent, refinance, and repeat. So we'd buy distressed properties, get them fixed up, get them rented out, refinance, try to get most of our capital back. And then we held on to those for a few years. We built a $4 million portfolio of BRRRR properties. And then when the markets ran up after COVID, we saw an opportunity to sell, and we sold everything, did 1031 exchanges, and bought vacation rental cabins in the Smokies. Now, Airbnb and stuff is getting a bad reputation lately, and there's some negative news going on, but we were very careful when we bought Airbnbs because I was afraid of what's happening right now, actually. I did not want to buy a bunch of Airbnbs in cities that could change the rules at any moment, and then I'm stuck with a property that won't cash flow on a long-term lease. So these vacation rental cabins in the Smokies, like that whole city, that Gatlinburg, Pigeon Forge, Sevierville market, it thrives off of vacation rental traffic. And these people want to go up there and rent these cabins. So it's not something we see as a high risk of it actually going away overnight. Very entrenched. It's going to be there, we believe, for a long time. Those are doing very well for us. So when we sold the single family portfolio, we took, we 1031 all of our profit into these vacation rental cabins. Our portfolio cash flow exploded. And so now we've scaled up to about 16 million in vacation rental cabins, and the cash flow is over 10x the profit. So anyway, that's kind of in a nutshell about me. I taught finance on the college level for a couple of years before I got into real estate. I'm a licensed appraiser. I'm a licensed broker. My primary income comes from my real estate portfolio, though.
So let's talk about that short-term rental stigma or the negative news, or just generally the things that you were kind of cautious and paying attention to when you made that transition. Like, what are you seeing in the market that is worthy of consideration right now?
Yeah, so I mean, take Dallas for example. Dallas just passed a rule legislation recently that no one can own Airbnbs, short-term rentals in the city in single-family zoning. So there was like over 1,000 vacation rental owners there that just overnight now they got to figure out something else, right? And probably a lot more that aren't even registered as that, not even licensed doing the short-term rental licensing route, that are just under the radar doing this. So this is going on in more cities. There's a lot of conflict around short-term rentals. Like, some people love them, some people hate them because the neighbors claim it's loud, there's parties going on, it's disturbing the neighborhood, they're parking in our space and whatnot. Then the people that own them think they're great because they cash flow well, and it's another income stream opportunity for owning a single family, and you make better cash on cash return if you've done it before. It's really great, I think, if you do it right. But it's not a passive type activity. Like, it's very management intensive. But I mean, our stuff in the Gatlinburg Pigeon Forge market, it's very different because, like I said, that market is driven by vacation traffic. They're going to the Smokey Mountain National Park. There's millions of visitors a year. These people have to stay somewhere. They don't want to stay in a hotel. They want to stay in a cabin because they're going to the mountains. They want to stay in a cabin, do the mountain thing. That's kind of the point of going there. So if they did away with the vacation rentals, there'd be like nowhere for all these people to stay. So, and it's very pro-business. It's a conservative area. So we felt like it was low risk. And actually, I looked very closely at buying something at the beach, but I was really concerned because the majority of the cash flow comes in one time of the year, which is the summer. And that worried me because, when the real estate market takes a hit, typically the beach areas are some of the first to really go down in flames. I didn't like that. And then I looked at the Smoky Mountains, not really my favorite place to vacation myself, but the vacation traffic was solid all year. And so that took a lot of risk out of the cash flows. The cash flows were a lot more just predictable and leveled off. Definitely there's some peak times, but we felt like overall that was a much less risky place to invest. We're really happy we did because, I'm reading stuff about all these markets going way down on the Airbnb traffic, and our stuff is doing great. So I'm perfectly happy I'm happy for other people to leave the vacation rental market. I'll just keep buying properties.
There you go. There you go. We've talked to quite a few people that have properties in that area, and we've heard nothing but great things.
Good.
I kind of want to rewind just a little bit. And, you said you're a broker, an appraiser, you've been doing a ton of stuff in real estate. You taught finance. Like, let's go back a little bit to, what made you get into real estate and why you started doing long-term rentals and how you kind of built up that $4 million portfolio before we jump back into, Airbnb, what you're doing now, how you built up this, $16 million monster,
Yeah. So why did I get into real estate? I tried the corporate route, and I just felt like a fish out of water. I just didn't fit in that environment. And, when I was going to college, I struggled to find subject matter that I was really that interested in. I loved business, but I didn't, when I went to Harding. It's a small school in Arkansas. It's a Christian school. They didn't have entrepreneurship, and they didn't have real estate. So I struggled to figure out what I wanted to do because those are my things, entrepreneurship and real estate. And I ended up getting a degree in accounting. Worst thing I could have ever done, really, because it helped me understand business, but I hated the work. And so my first job after undergrad was at a public accounting firm, Big Four public accounting firm. So that was the job everybody told me to get. I got this job that was sought after, and then I was just sitting in a cubicle, just absolutely miserable, working 90 hours a week sometimes. And I was just thinking, how can I get out of this? Like, I wanted to work for myself. And so my buddy he had just left his boss and was starting his own appraisal business. and he called me and said, "Hey man, I just left my boss, starting my own appraisal business out of the back of my house. You were the first person I thought of. Do you want to join me?" And I said, "When can I start?" So I took a pay cut, but left that job that felt like it was absolutely suffocating me. Went over and got into appraisal, and I wanted to do appraisal because I got to be around real estate, and I got to learn how to value real estate, which has helped me tremendously, because half of really finding a deal, or actually a lot of it, most of it, is really being able to identify if there's enough meat on the bone to make the whole deal work. And so that valuation experience has really helped me a lot. So got into appraisal. Then while I was doing that, got my real estate license, started selling houses on the side, bought my first few rental properties, and then the rest is history.
Tell me a little bit about the appraisal business, because I'm really curious. We haven't had an
Yeah.
appraiser on the show, but what does that look like from a numbers standpoint and growing that business? Did you come on as a partner, or were you just kind of an employee? Like, just give us all that back.
Yeah, my first job, I just came on as an employee. You have to start as a trainee, and every state's got different rules for experience. You have to typically pass a state licensing exam. You got to have like 2 years of experience training under a licensed appraiser. It's harder to get your appraisal license than it is to get a college degree, believe it or not. But there's a shortage of appraisers right now nationwide. So if you want to go through the chaos and inertia of getting that license, once you got it, I mean, I turn down appraisal orders every day. So it's not the most lucrative part about being an appraiser is the knowledge you gain. It's not how much you make for doing an appraisal. That's kind of the slow and steady, non-volatile income part of it. But you learn a skill set that'll allow you to recognize $1 million in value that's sitting in a deal that could be captured. So that's what's helped me the most with appraisal, is I've made good income on it. And I've done it working for myself. I've done it working for others. I worked for CBRE at one point. They're the largest real estate services firm in the world, and I was doing commercial appraisal work for them. There were people at CBRE making 7 figures doing appraisal. Now they're up in management level, but even the lower level guys, some of them are making 6 figures doing commercial appraisal work. You can make a good bit of money doing it, but it's a grind. I mean, a lot of these guys are in a cubicle when they're in the office, just cranking out these reports, and these reports are like 80 pages long, with tons of data. It's a lot of minutia involved, but there's a shortage of appraisers. So if that's something somebody's interested in, check it out.
I think that's huge. And I think what an amazing skill set to learn as an investor, because that's the biggest thing, especially when you're doing BRRRR investing, whether that's with single family, small multifamily, or commercial properties, that's the goal of a lot of people out there. And the biggest thing that holds all of those deals up is the appraisal. Like you live and die by the appraisal. And it's like, by having the knowledge of what the appraiser is looking for and how to analyze the market and know the value of your property and what you're going to do to it to increase that value, and give that appraiser the information that they're going to need to help you get to that value. Like you said, I mean, the return on that investment is absolutely significant. With that being said, what would you say would be like the top 3 pieces of advice that you could give to someone doing a BRRRR project that's going to have to deal with an appraiser to kind of help them do their job and kind of help inch those numbers up a little bit?
Yeah. So some tips to help you on your appraisal. I always recommend, typically on a BRRRR property, you've already, there's 2 ways to do an appraisal on a BRRRR property. You can get the appraisal done on the front end, and it's going to be done subject to completion, right? You're going to give them a list of all the things you're going to renovate. They're going to look at that, the cost. They're going to go appraise the property as is, but they're going to consider all your proposed renovations in the value. That's going to be based on it being fixed up. Most people renovate their property and then go get their appraisal done, because that's going to give you the best chance of being able to refinance out and get most of your capital back, right? So when you're doing it on the back end, you want to make sure that number one thing is make sure the appraiser has a list of the things that have been done to the property and how much they cost. If you just let the appraiser go in there and they don't know what you've done, they're going to see a nice property, right? But you may have spent an extra $20,000 there that they're unaware of on things like putting in new electrical, putting in new water lines, all this other stuff. So give them a list, an itemized list of all the things that have been done and how much they cost, and that'll help them know your cost basis in the property. And there's entrepreneurial incentive to be considered as an appraiser. So somebody's not just going to want to go fully renovate a property and not have any meat on the bone left over after that. So, if they're in it for 200, they didn't just do it to get a 200 valuation back. They're hoping there's more there. And so you want to know what their cost basis is, what they paid for it, what they renovated, how much that cost. And then you're looking at the comparable sales to try to figure out what that's actually worth. So just because they put a bunch of money in something doesn't mean it's worth that, right? But you want to know what they put into it. So another tip would be make sure your place is light, bright, smelling good, clean, just like if you're trying to sell it. You don't want an appraiser to walk into a place, not be able to access each room, crawling over a bunch of junk in the floor, trash stacked to the ceiling, all the lights won't work. I mean, that's not going to reflect well on the property. So make sure it's clean and that kind of thing. Trying to think of some other good ones.
One of the things.
Yeah, go ahead.
One of the things that that I always did is I always, with that packet of that list of everything that I've done with the prices next to it, is I would always provide before pictures in that packet, so as they're walking, because they're going to take the after pictures so they could see what it looked like before, see what my list of money I spent on was. And then I would always try to provide 4 or 5 comps that I used to get to my thing. Like, hey, this is just kind of what I was basing mine off of. Here's the list. Here's the before pictures. I'm coming in between $200 and $225 a square foot. Hopefully this helps,
Yeah, definitely provide, if you've got 3 or 4 comps that you love, give those to the appraiser. Now you can't influence the appraisal value. You can't say, hey, I've had so many people do this, by the way. They're like, hey man, I need 300 on this. And I'm like, that's not really how this works, right? Like I can't tell you you're going to get 300 because then I'm not doing my job right. But just give them your comps and stuff you renovated on the property, then let them do their job, right? Just kind of give them some space, be kind and courteous, let them do their jobs. Some people, hey, I'm an appraiser and people still come in low on my deals. So it is what it is. It's going to happen to you if you're doing this and you're doing a lot of properties, but you can help yourself if you approach it correctly.
I love that. I love that. So you're doing this appraiser business. You start selling real estate on the side. You said you start picking up a couple deals. Like, let's talk about that a little bit. Like, what were they? We know kind of where they're at. Were they single family, small multifamilies? Let's start progressing this journey down the road a little bit.
Yeah, my first property was a house hack, and house hacking is basically buying a property, living in there, turning it into a rental. So I did kind of a live-in house hack. I bought this property right after college. It was in Fort Worth, Texas, and I rented rooms in it to my friends. So I was living there. It was also a rental. I started out with 2 buddies living there, and then people got wind of the fact that I had a place that were also graduating and moving to Dallas, Fort Worth. So I ended up with 4 buddies living in there. It was like a 3-bedroom. So there were 2 people sharing 1 room, but the rent was covering my mortgage payment with money left over. So I was like, this is awesome because I don't have a mortgage and I'm cash flow positive on my house payment. And then we're splitting the utilities 4 ways. So it was like that whole time I lived out there, I basically didn't have any housing cost, And then I renovated that property before I moved out. And after the renovation, I think I made profit $80,000 or something. But that just lit my fire for real estate investing. And in the meantime, I was reading Rich Dad, Poor Dad. A lot of people talk about that book, but I remember just reading that book and saying, I got to get into this. This seems so smart. It's a different way of doing things. And if you get enough real estate, you can become financially independent. You can work for yourself. You can have flexibility, and you can get out of the cubicle, which was what was killing me at that point. I was just stuck in the cubicle all the time, and I had this real estate doing great, and then I'm spending all my time in the cubicle stressed out. I was like, I got to do more of this real estate and less of this cubicle stuff.
That's amazing. That's absolutely amazing. So how long was it until you bought your next property? Like, did you turn that one into a rental, or did you sell it and then buy another one? Like, how'd that journey go?
Yeah, so while I was living there, there was a house that went up for sale right down the street, and I went down there and looked at it, and it was in really rough shape. And by the way, this is before I'd never heard of bigger pockets at this point. Like, I was just doing this because I was interested. I didn't really know anybody doing real estate. I just had I had a hankering for doing this, and I was like, I got to figure this out. And so down the street, I found this property. I decided I was going to flip it. I had just closed on it, and somebody busted out the windows, and we found termite damage. And I mean, it was an absolute wreck in there. And I remember I was looking at the property, and the older lady from across the street came over, and she said, "Did you just buy this property, son?" And I was like, "Yeah." She said, "You just made the worst mistake of your life. You're gonna lose so much money on this." And I was just looking at this lady, and I'm like, I hope she's not right. You know what I mean? It's like, I think she's wrong, but I really hope that she's not right. And then, so I worked really hard on that property. I think after everything was done, I made $25,000 profit on it. So I was really happy with that. And the thought crossed my mind, I'm going to get that $25,000 in ones in a wheelbarrow. I'm going to roll over to her house, knock on her door, and be like, "It worked out," you know? But no, I didn't do it. But I was tempted, man. I thought that'd be really funny.
Can't listen to
But
those
anyway,
naysayers, even if they're neighborly old grandmas. Like, well,
yeah.
you know, what do they know? They're just jealous that they're not taking the same risk that you are. So I'm glad it worked out for you.
Thanks.
So I want to talk a little bit about how you transitioned briefly to grow your portfolio up to $4 million. Like, where was the jet fuel introduced into this process to really get you to a portfolio? How many units did that comprise at that time? And what did your cash flow look like?
Yeah, so I'll have to say the jet fuel was, I had this experience with these properties in Texas. I got my appraisal license. I got my real estate license. One of my friends called me, one of my best friends, we were friends growing up as kids. And he called me, he said, "I just had the best year ever in my sales job." He's like, "I want to get into real estate. I don't know anything about it. I don't know what I'm doing." He's like, I figure you know more about what you're doing than I do. So how can we help each other?" And I didn't have the cash. I felt like I had the knowledge with the appraisal, knowledge I built up, but I didn't have the cash that he had. And so I said, kicked around some ideas, and I was like, "How about this? How about you put he had $200,000. I was like, "How about you put $200,000 in the business? You and I'll split the business 50-50. I'll do everything. I'll handle finding the properties. I'll handle the renovation, managing the contractors. I'll handle the refinance. I'll handle all the financing with whoever our lender is. I'll handle everything. You let me try to get us BRRRR property deals, and let me try to get us all our money back, and we'll just keep recycling this 200,000." And I said, I'll pay you back all of your money before I ever get a penny. So he was happy with that. When he heard he was going to get his money back before I got anything, he knew that I was kind of in there until he got his capital back. And so it was kind of a fail safe for him. So that's what we did. And the first 3 properties we got all of our capital back, and he had never even seen the properties, never been inside them. He was living in a different state. And he was like, "Dude," he's like, he's like, "This is the craziest thing ever." He's like, "I just made $100,000 and I've never even stepped foot in these properties." So that kind of lit our fire for doing more of this. And then we just kind of gradually scaled up with the cash flow profit from the properties that we had on top of that initial equity.
What time was this? What time frame are we talking here? Like, what years were you doing this?
Yeah, so let's see. This has all happened. So I basically went from zero real estate to where I am now in about 5 years. So that was, let's see, that was 2018.
Okay. 2018,
So,
19
yeah,
is when all this
2017, 18. So it's like 5 to 6 years.
Okay.
That's when we started the whole BRRRR property thing. And then, on the backside of that, after we got 20 properties, we identified this opportunity in vacation rentals to over 10x our portfolio profit. That's when we sold all that stuff. And we sold all that stuff in 2021 and moved all that profit. And of course, we had built in about 2 million in equity in that single family portfolio. And I'll say this to the listeners, single family is a great retirement strategy, but for us, it wasn't a great cash flow strategy, because it's like we had these big ticket items constantly having issues. When you own 20 properties, it's like if you got a roof on one property one month, and then an air conditioner on another, and then a gas line, and then a water line, and it was stuff like that happening all the time, even though we had renovated these things, and the capex was just bleeding us on our profit, on our cash flow. So we were cash flow positive, but it wasn't great. But we had all this equity we had built up in addition to what we had put in. And we're like, if we take this equity and move it over to vacation rentals, our portfolio profit will explode. And that's kind of how we got to where we are now.
So just to give our listeners some context, it sounds like you had some phases in your real estate journey. You did your single families, and then now you're getting into the short-term rentals. What was your either gross or net, however you want to calculate it, cash flow from those 20 single family properties? And then we can talk about the short-term rentals.
Yeah, so those were profiting on average $200 profit per door per month. So
you're making about $8,000 a month.
No, we're making about 20 of them. We're making about $4,000 a month, $48K a year, roughly. Then we moved it over to the vacation rentals. We're at about $600,000 profit a year now.
So I love this because we talk about return on equity all the time. So you are looking at $2 million in equity sitting there,
exactly,
available cash. But you're only bringing in $50,000 a year.
Yep.
Right. Yep. So 20 years to make $1 million, 40 years for the 2 million. You know what I mean? Or you could sell all that right now. You could get 40 years worth of cash flow right now and go deploy that into higher income assets. And that's what you guys decided to do. And that's why I think sometimes people get hung up and comfortable in their strategy. You guys were doing amazing at doing BRRRRs. Things were going really well. You built up a nice little $2 million net worth with those properties. You could have kept doing that and probably in another year got that over to 8, but then you're splitting that 2 ways. You're doing all this work. You have this paper money over here, but the hard money isn't actually coming in every month. So I love the journey that you're taking us all through on how to 10x that. So when was it that you really got fixated on switching over to the short-term rental game? Is it you bought one and then we're like, let's go? Is that kind of what happened?
Well, my business partner and I we're a good balance for each other, because I'm always full steam ahead and he's always trying to pull us back. And it's a good thing because he's more risk averse. I'm more okay with taking on maybe even some risks that I probably shouldn't. And we balance each other out well. So I had been wanting to get into vacation rentals and short-term rentals for a while because I had heard the cash on cash was better. We didn't own any, but my business partner bought one with his wife up in the Smokies, and it was a small one, and we got to kind of observe how his was doing. It was doing great. And we were running the numbers. We're like, wow, the cash on cash is a lot higher, just like we thought. And so we sat down at lunch one day and I was like, okay, we've got $2 million of equity. We're getting 50 grand on this. That's like 4%. That's terrible on our equity. And granted, it felt good because we had pretty much all of our capital back. So that 50 grand we had created out of thin air, right? It was almost an infinite return on investment. But on our equity, 40,000 on 2 million is not great. So I was like, we need to sell this. And the pain in the butt with selling single families is you got to sell them one at a time, right? Unless you sell the whole portfolio, and then investors want a big discount on that portfolio. So like, how are we going to sell all this? And so we were the market was on fire. This was 2021. Like, people were fighting over properties. We're like, let's just put 2 or 3 of these up at a time, sell these, try to group them together and do 1031 so we can take down large vacation rental cabins. So we were sitting there at lunch, and back of the napkin started figuring it up. I'm like, okay, we take $2 million, we could get 5 large cabins. If they're cash flowing like your other one, that would mean we would go from 50K to like 500K, and it actually ended up being 600 because they sold for more. The single family sold for more than we were anticipating. So, and we got great deals on the cabins, and that was right before the vacation rental thing exploded. So we felt like we were very fortunate with how we timed all this, because now the vacation rental stuff is way more expensive and the cash on cash has come down. But that's how we ended up making that changeover.
So how many separate transactions did you end up doing? And then what does your current portfolio kind of look like? How many short-term rentals do you have?
Yeah, so we've got 6 vacation rental cabins in the Smokies, and these are large. Our smallest one's 4 bedrooms, but we have a 7-bedroom, a 9-bedroom, 2 11-bedrooms, and a 12-bedroom. And some of these cabins are like 3 stories, movie theater, game room with video games, and we got hot tubs and like beautiful views of the mountains and stuff, and HOA's got pools and all that. So a lot of these cabins are really great. I mean, people are spending an insane amount of money on these things. Like 1 week at one of the cabins in the summer is 20 grand in revenue. So this is like 50 people can stay in some of these things. So it's like you're having, you may have 10 families of 5 stay together, and they all split the cost. And so that's my theory on why this has continued to do well. When people are trying to save money, they'll just all stack into one cabin together, and they split the cost, and it's a cheaper vacation for them, as opposed to them all paying higher amounts for smaller places by themselves.
2,000 for the week
Exactly.
together, or 5 to 6 for the week by themselves.
Exactly. And you got a movie theater, you've got a hot tub looking out over the mountains, and you've got a game room with all these video games. I mean, there's a lot of cool stuff to do as well. And it's a really nice looking place. So you feel like you're staying in this really extravagant, nice place, and it's not breaking the bank,
That's awesome. And so we know you still have the 2 million in equity, because you're just putting it down as down payments on these new properties. So I know
you asked how many transactions. I apologize. There's 6 cabins in the Smokies, and then we have 1 vacation rental property in Alabama that's got 7 vacation rentals on one parcel, and those are fishing cabins on a lake there. Sorry about that.
Oh, no, amazing. I'm just trying to comprehend. So you were able to take that $2 million, and then now you have $16 million worth of real estate. And what's your equity in this portfolio now? It's got to be more than the 2 million.
Yeah. So the 16 million is what we think it's worth today. When we bought it, it wasn't 16 million at that time, but I think we've got at least 6 million in equity right now, if not more. That's with things kind of ticking down some. But yeah,
tripled up.
I mean, the cash flow is the craziest part to me, because when you're making 50K on a portfolio of 4 million, that's great and all, but when you go to 600, that's like life-changing money. That's financial independence money, because now we each got 300 a year, and we've hired somebody to manage all the vacation rentals for us. So it's about as passive as you can make vacation rentals for me, because the guy we hired is handling all this stuff. So he'll come to us occasionally with a question about, hey, this guest is, having this problem, and we'll tell him what to do. But generally speaking, I don't even hear from him. So this is 300K a year, and it's pretty passive for us.
So this manager, let's talk about that a little bit. How are you paying them? How'd you come across this person?
Yeah, he was a friend of mine. And he was stuck in a job that was long hours, and he was stuck in the grind as well. And I was, thinking like, hey, if I'm in his position, I'm not getting to see my family, my kids very much, and I'm working till midnight and stressed. And my buddy over here is doing great in real estate. It'd be awesome if he would help me out, So I was like, if we're going to hire somebody, I would like to give him a shot at it first if he wants to do it. And he ended up wanting the job, and he's working as a contractor. And so he's got total flexibility. Like, he can work from home if he wants to. I've got this office here that he comes in and works with me. And I mean, some days he's not getting any calls about any properties or anything. And he and I'll go play disc golf or go fishing or whatever. So it's like, I mean, and he doesn't work till midnight anymore. I mean, so he's got a great job. His income went up, far less stress. He's working with one of his best friends. And it's great for us because we just made our portfolio as passive as we can doing this.
And what are you paying him?
He's getting paid roughly like 4 to 5% of gross revenue.
Okay.
That's awesome.
And then, like, if you go to hire a property manager, some of these companies are charging 20%. So,
Exactly.
the good thing for him was we were like, well, if we're going to hire somebody, we don't really want to hire somebody, a salary employee, because this stuff is kind of up and down. So we'll just find a contractor, and it's worked out so far.
Hell yeah. I mean, you guys are saving on the overall management. Like, you have a say even more because you're setting up the processes and procedures for him, and when you win, he wins.
Exactly.
So I love that even more. And he's dedicated to your portfolio and nobody else's. So that is freaking fantastic. So with that being said, like, is there still opportunity for the people that are listening out there, like in Gatlinburg, in the Smokies, in Pigeon Forge? Is there still opportunities out there for people to get into the market? And if there is, where do you see them? Is it in those, larger properties? Would you recommend someone go after the biggest property they can afford? Or, is there still opportunities in those, 3-4 bedroom kind of properties out there?
That's a great question. I tend to think that the larger properties have a more competitive advantage. Sorry, I tend to think the larger properties are more competitive and have more of a competitive advantage than the smaller ones. It's kind of like Warren Buffett talks about the moat, your competitive advantage, which is the moat that surrounds you and protects you from your competition, right? The larger properties, there's just not as many people buying the larger properties. They can't afford it. So, some of these larger properties cost $2-3 million. So you got to put down $500,000 to buy them. So there's just not as many people buying them. But, when you've got a 12 bedroom and you can stack 50 people in there, they stay booked up pretty well. So we found that our larger ones are doing better. So I would recommend, if you can, buy a larger one, because I think you have more of a competitive advantage.
I'm kind of curious, like, obviously the price points that you're talking about are much higher,
Right.
$1 million, $2 million properties. Have you ever heard of anybody doing syndications for this niche? Like, that's not something that's come across my radar. I'm getting pitched on syndication, multifamily, self-storage, warehousing, whatever, but I just haven't heard anybody pursuing this as a niche. Has anybody in your circle?
I think there are some that are doing it. It's a little different because, the traditional syndication, I'm thinking about multifamily, right? You're coming at somebody with like an 8% preferred return, and, there's waterfalls and all this stuff. Well, on cabins, because I thought about doing that myself, but first of all, there's not a lot of larger cabins for sale. So just the deal flow, like if you wanted to put together a $10 million portfolio of these and you went out and raised a fund, I don't know how long it would take you to actually be able to get $10 million of large cabins under contract up there. Now you could do it nationwide, right? But I thought about that, and then I was like, okay, it's going to be a bit awkward getting one of these under contract and telling them I need to wait for a couple months while I raise the money. And then if I don't have the properties under contract, I'm raising the money with nothing to show the investors as far as the property I have. So it's a little bit different than commercial, where you can get a commercial property under contract and have months to close on it. Like, these are residential in nature, so the sellers want to close on them like they would a house, So I know there are some people doing this, but I think the way they've done it is they've gone out and raised money and said, we're going to try to take down this many properties over the next, 6 to 12 months. I don't know how that's gone though, but it's definitely there's opportunity there. I just don't know many people doing it.
Yeah, I mean, well, it also sounds like, you get 5 people, 100 grand a piece.
Yep.
You're splitting the deal, and you go out there and you buy a $2 million one of
Yep.
these and try your hat at it. You
Yep.
know,
That's probably the best way to do it, as opposed to raising and going about that. But I'm sure you could raise. I just think it's probably a little more complicated than just because of the residential nature of the property, But I know you could do it for sure.
yeah, and for like, so there's opportunities out there, is what you're saying. There's still
Yep.
opportunities in these markets to go
Definitely.
out there, try to go as big as possible because more people can fit. That lowers their average cost per night as a family because this is a family place, and I tend to agree with you regarding the beach. Like, you know, those are the first places people stop going. The beach trips, those are the hardest hit type of areas. So at least with the mountains, it's year round. You can still go camping and all this other stuff there. There's a lot more attractions. There's all of that. So,
Yep.
I mean, I think that's great. Are you currently looking to expand into any other markets? Are you guys looking to grow in that market even more? Like, let's talk about your goals a little bit and kind of where your business is headed for you guys. Like,
Yeah.
break that down for us a little bit.
Yeah, it's an interesting question. I've thought about this a good deal, and I know I could keep taking down vacation rentals. And vacation rental management is one of those things where, like, the most important piece of it is the cleaners and the maintenance. You got to manage it through your customer interactions, through your apps, your Airbnb, VRBO, that kind of thing. But the most important part is your team, your cleaners, and your maintenance. So when you go into a new market, you got to do all that over, you know? So when we got into the Pigeon Forge, Gatlinburg, Sevierville area, and we had great cleaners, great maintenance people, our reviews are great online. It's so much easier for us to just buy something there. It's plug and play versus, I love Asheville, North Carolina. I'd like to own one there, but I got to create the whole system all over again up there. And I would know how to do it. It's just, I got to go out and form all those contacts all over. And so I really honestly think my next step is going upstream and trying to do larger commercial deals. That's my next goal. That's one reason I do my podcast, which is the Daily Real Estate Investor, by the way. I'd love for anybody here that's interested to check that out. But I'd like to get into multifamily. I've always wanted to do multifamily.
All right. So, I mean, I love that. And I think that's extremely valid points. Like, you already have a winning system. You're already financially independent, with what you've been able to build in the last 5 years. Like, do you want to try to replicate that somewhere else or go into a different market and use this business as the foundation to help you get to your next level? Right.
Right.
So, you know, let's get into that a little bit. Like, what does that look like? Next steps. Is that doing a syndication? Is that buying a 50 or 100 unit? Like, let's talk about that a little bit. We've already got a really good grasp of what your portfolio looks like now,
Yeah.
currently. Like, let's talk about those goals.
Yeah. So right now I'm working on starting a flipping business, which I've done a lot of before, just kind of here and there. But I want to, my goal is to work up to doing 50 to 100 flips a year. And I want to take the lion's share of that capital and invest in buying apartments or building apartments, and also in improving my social media presence with the podcast. I got a YouTube show going now as well. Just trying to generally reinvest in the business and build that in the hopes of connecting with investors, raising money, taking down larger and larger deals. And one reason for that is I'm very comfortable where I am. I could literally, if things were continuing as they are now, I could not work and just kind of hang out and do whatever I wanted and be fine. But I'd really like to start a nonprofit with a portion of this money to start schools, orphanages, and churches in areas that need that kind of thing. So that's something I'm passionate about. So my vision for that is probably scaling through multifamily, because on the vacation rental side, I would have to hire so many people to go into a bunch of other markets and do the same thing we're doing, that eventually I would basically be owning a business with a lot of employees. And I have intentionally tried to stay out of that, because I don't want my time to be tied up with the cubicle life that I escaped, right? So I'd rather have contractors, and I'd rather kind of manage things um, from wherever, instead of having to go into a specific office and have employees there. And so I view multifamily, and I love self-storage as well. I'm open to that, but I view multifamily as kind of the vehicle to help me go upstream, leverage doing syndications, the social media presence, the podcast, and to be able to take down larger deals, and also earmark some of this money for this nonprofit I want to start.
Let's talk about this flipping business a little. Are you going to be
Yeah.
doing this in some of the vacation areas where you kind of have a business ongoing currently, or are you going to be doing that closer to home? Like, what's your vision for that business?
Yeah, so I was flipping houses previously in Dallas Fort Worth, where I had the BRRRR properties, and so I've already got all the systems in place there, the contractors, the leads, all that. And I know I used to live out there doing appraisal when I started off, so I know those areas pretty well. And so I'm definitely going to be flipping out there, and probably also in Huntsville, which is very close to where I live now. So those probably be the two markets that I focus on to get this whole thing going.
Gotcha. Very cool. If you were to talk to somebody who's just coming into the business, they want to get into vacation rentals. I know we kind of talked about what your price point might be, but outside of that, what kind of suggestions might you have for a new investor who wants to get into the short-term rental market?
Well, first thing I would suggest is really examine the areas you're looking at investing in, and make sure that you're not putting money into a place that could change the rules on you at any moment. Like, try to find a place that, kind of like the Pigeon Forge, Gatlinburg, Sevierville market, that you feel like is going to be there for a long time without any rule change, possibly being, dropped on you without you being ready for it. So I would go into a vacation destination area. If I were a new investor, I would probably start by using the second home loan. You can buy one with a second home loan, and that requires you to put as little as 10% down. And this is, my lender has told me that they're fully aware that you're using it as a vacation rental, as long as you stay in it. I think it's something like 10 days to 14 days or something like that per year. It qualifies as a second home, and then you can also rent it out. So that's a great way to get your first property. And one of the very best things about vacation rentals, this was a massive benefit to us when we traded our portfolio from single families over to vacation rentals, and took that equity and bought a lot more in real estate, is the depreciation. Because I'm a real estate professional, I can accelerate the depreciation, and it helped me pay zero in taxes, or next to zero in taxes, the last 2 years when I had great income. So that's a huge benefit. So if you get into vacation rental investing, you go get a property on a second home loan, 10% down. And if you qualify as a real estate professional, and you can talk to your CPA about this, they can fill you in. But if you're managing that property and you qualify based on the time spent on that property and are not a real estate professional, you can qualify even then. But make sure and talk to your CPA about that. I don't want to give advice on that because I don't want to mislead you. But you can qualify that way as well, and take that accelerated appreciation against your income.
Yeah, that's all amazing, solid advice. And I think the listeners are definitely now like sitting here going, man, I gotta get into one. I'm doing this, I'm doing that. Like, this is the plan. So before we get into our last segment of the show, I really want to ask, like, what's the main obstacle or obstacles that you see yourself facing, to take your business to that next step, to get to that next level? I know we've talked about a little bit of it, but like, like right off the get, what do you see as like your one or two like biggest obstacles to get you to that next level in your business?
Well, I mean, the market is in real estate, there's always deals available in every market environment. The market right now in multifamily, which is what I want to get into, is really it's being squeezed. It's being squeezed from all sides. Insurance costs have gone way up. Interest rates have gone way up. So the margins on these deals are getting squeezed. So people that overpaid are really struggling. So there should be some deals that start to float to the surface and be sold where people are panicking. That could be a good time to get into it. But the biggest barrier is probably, I haven't raised money before to buy a multifamily deal, and I believe I could, but just getting my first multifamily deal done, maybe on my own with my own money or a couple investors I know, getting the reps and experience with it, and then kind of going upstream from there and doing the syndication thing. So it's just like it is with anyone else. Like it's the same barrier as to someone who's never bought a property before. I'm just going into uncharted waters, trying to learn something new. And so it's just getting in there and getting the reps and learning it,
What a great answer. And I know I say this all the time, but I love that because that's the same thing for everybody. Like you mentioned, whether you're looking to buy your first property, your next property, your first vacation rental, move into something else, like you just have to put your reps in. You need that experience and you need that confidence. You don't have confidence raising money because you haven't done it. You don't have confidence in multifamily because you haven't done it. But you've built up the confidence and experience in something else that transitions well into that. So as soon as you knock one down, you're going to run with it. So that's freaking awesome. So let's get into our last segment of the show that we call the Big Four. James, take it away.
All right, Josiah, tell us something that you have done personally, business-wise, that's kind of like a cheat code for propelling your personal finances forward.
Using other people's money. I mean, I started my whole BRRRR property portfolio with $200,000 of my friend's money, an investor, if you will. But I mean, using other people's money is the game changer in this whole thing. So if you can put in the sweat equity and you can educate yourself to a point where you know what you're doing, there's people with money out there. And so you can really leverage that to grow your business. So this flipping business that we're about to head into, we've already got private capital ready for that. So I have a good bit of other people's money I can leverage to go flip these houses, and that should generate a good bit of capital. So using other people's money to invest in real estate has changed my life.
Love it.
Great answer. Great answer. All right. Number two, we call this one resources. So are there any particular books, podcasts, or people that have really shaped your financial independence journey, your real estate journey, your mindset that our listeners might not have heard of before that they could benefit from?
So one of the books that just blew me away was The War of Art by Stephen Pressfield. Have y'all read that?
I have not.
Check that one out, man. It's an easy read. It's quick, but he basically discusses resistance, the resistance that you experience when you do anything that is stepping outside the box. It applies to real estate investing. It applies to pursuing financial independence. It applies to writing a new song, writing a book, doing your first movie, being a YouTuber. You're going to encounter resistance that's going to require you to have to persevere. And it's going to be, sometimes it's going to be, there's going to be nobody cheering you on. There's going to be people, there's going to be trolls giving you negative comments. What you're doing in your flipping business isn't going to make enough money. Your rental's going to have problems. That's the resistance that you're going to experience in life when you're pursuing growing and trying to reach new levels. That book really made a big impact on me. And so when I come across these issues and the inertia that there always is in growth in my business, I always think of that book and the resistance that he refers to. So, I mean, another resource is podcast for me. I mean, YouTube. I prefer to watch YouTube now over watching TV. I mean, if I have an hour to spend, unless there's a football game on I want to watch, I'm going to jump on YouTube. And I have so many different YouTube channels that I like, so I mean, all the way, ranging from Tim Ferriss to Joe Rogan to, I was big into Bigger Pockets for a while. There's some apartment, multifamily podcasts that I like and shows on YouTube and stuff. So I think YouTube is a phenomenal resource for learning about anything you want to learn about. And then just audio podcasts as well. And I'm in the car. If I have an hour, instead of, sometimes I'll listen to music, but a lot of times I'll just turn on podcasts and just chew through 3 hours of somebody's show and learn. You can learn so much from people, and it's all free.
I love it.
Exactly.
It sounds like the War of Art kind of gave you the tools to disregard the neighboring grannies who told you wouldn't take it when you were doing your flips. So
Yes.
perfect. I like it. So on this one, Josiah, I want you to put yourself 5 years in the future. Personally, business side, where are you at? Where's your business? Where's your life 5 years from now?
So because I'm working so hard on this YouTube channel and the podcast, I would like to have significant traction with subscribers on the YouTube channel. And I would like to have that because that means that the syndication channel has opened up, and I would like to own a number of multifamily properties and have traction with this nonprofit as well, having already gone and built several, buildings in impoverished areas that are, that we're wanting to, go and do this work in. So I've moved on. Honestly, I've moved on from having a dollar amount that I'm trying to target to trying to keep it a little more general, because in the past, I don't know if you guys have ever encountered this, but if you say, I want to make $100,000 by January, and you get to January and you're making $99,000, I don't know that you should feel like a failure, right? And so I'm trying to embrace this idea of, I want to do big things, but I don't want to be so focused on the dollar amount. I want to be more focused on the general progress that's being made. So that's how I'm going after it. Some people would say you're doing that exactly wrong, but that's kind of how I think,
If it works for
I
you,
think that's all.
for you. That's all that matters.
Exactly. No, I think that's great. And by focusing on that aspect, the other aspects will come. So that's amazing advice. I love that. And we'll definitely have to have you back sometime to talk about where you are in that journey. So number 4 is for everyone that feels motivated, a little more educated and inspired by your story, where's the best place for them to connect with you and follow you along on your journey?
So I'm active on Instagram. That's at Daily Real Estate Investor. And then I've got the podcast that's been going for several years. It's on all the podcast channels, like Spotify, Apple Podcasts, that kind of thing. And that's also the Daily Real Estate Investor podcast. The YouTube channel is the podcast on video, and that's got daily content coming out as well, with shorts and the long form stuff. Those are the best ways. And if you are looking for a vacation rental property in the Smokies, I'm a licensed broker there. I'd be happy to help you. If you want to reach out, shoot me a DM on Instagram, and I'd be happy to help you if it's something that I can help you with.
That's awesome. Well, everybody go follow, subscribe, listen. And with that, you guys know the drill. If you like this podcast, if you hated this podcast, do something and leave us a review. We need to know your feedback. We're trying to get better each and every week, bringing you amazing guests, just like today, helping you learn along your journey to decide, commit, and take that action. So the first way to do that is commit to leaving us a review, take that action. And with that, we'll catch you next time. See you guys.
Thank you for listening to the Real FI podcast, where you learn from the investors that have lived the hard lessons for you. To connect with us during your pursuit of financial independence, be sure to join our community by following us on Instagram or emailing us at info@therealfi.com. If this content made you financially, mentally, physically, or spiritually richer, please make sure to leave us a positive review on your preferred content platform. Cheers to kicking the 9 to 5.